Hey guys, welcome in. I'm here with Katie at American Pacific Mortgage. We're here to discuss some of the lending products she has available and what to know about choosing a lender, the importance of it, and how you should do your due diligence up front before buying a home. Katie, go ahead and introduce yourself.
Yeah, thank you so much for having me. My name's Katie Ott. I'm with American Pacific Mortgage. I've been in the industry for about 10 years and just super excited to be doing this and get some of this info out to you guys.
Great. So, Katie, what makes a good lender or a mortgage broker?
Such a good question. There are a lot of different things. I would say experience would be the first thing. Just from my own background, I know I started doing this at about 2021. And it took me about 2 years to actually get comfortable and say, okay, I can do this.
All right, Katie. So why is it important to use an in-state lender versus an out-of-state lender?
Okay, so there's a couple different reasons. And I know from you and I working together, I have, what am I trying to say? There's a sort of accountability when you're working with an in-state lender. I mean, I see you guys all the time. If I mess up a transaction, I mean, that's going to get around. If you're working with an out-of-state lender, I mean, they're never going to see you again. They're never going to see any of these agents again. So there's not
an accountability.
Yeah, I guess that accountability piece would be the main thing, is that there's not a lot of incentive to get the job done, especially if you're working with somebody in a call center or one of those internet lenders. So just, I would say that would be the main thing, not to mention just the time frames. I mean, when you're working in a market like Seattle, it's so fast paced. You have to respond to emails immediately. You don't necessarily get that if you're working with a lender, say in Idaho or, out of state.
All right, Katie. So tell me about how you've worked with first-time home buyers. I have gone to you several times with people who are either not quite qualified, they don't have enough cash in the bank, and you've done such an amazing job at getting those guys where they need to be. Sometimes it's a longer process than what we would anticipate when I first work with the client. And I'm all about that. Whether you're buying a house in 3 months or in 2 years, I want to be with you every step of the way. So tell me a little bit about that.
Yeah, I share that take on it as well. First time home buyers are my favorite. That's why I love my job. That's why I do what I do. Just because I do believe in the value of home ownership and how that can build your wealth over time. But as far as products go, I mean, the Washington State has a couple of down payment assistance programs that are really, really competitive, and have helped lots of customers get into home ownership. So that's one. They offer some down payment assistance. And then other than that, there's, the Fannie Mae, Freddie Mac, first time home buyer programs with some discounted mortgage insurance, different things like that.
Katie, we've also worked with a couple of clients whose credit wasn't quite up to snuff for getting a loan. Can you tell me more about that?
Yes. So, and I like to say too, if you're coming to me as a client that wants to purchase a home, it's never going to be a no, you can't buy a home. It's always going to be you need to do X, Y, and Z to get into home ownership. So one of the things that we can do is work on building your credit. There's rapid rescores that we can do. And I can actually see, hey, if you pay off this card or if you pay off this card by this percent, how much will that raise your credit? So there's different things like that we can do. But in general, I mean, pay your bills on time. You want to keep those credit cards under 30% utilization. But yeah, if you're not there, we can definitely get you there.
And make sure once you're in contract, you don't buy a boat, right?
Yes, thank you.
Or a car.
Or blinds.
Or blinds. Or, start a credit line at Marshall's.
Yeah.
It's very tempting, but let's not do that. All right, Katie, so there's a ton of conflicting information out there as far as where interest rates are going, the economy. Some people claim to know it all, and I am a firm believer that we only know so much. So what do we know and what do we not know?
A good sign that that raising interest rates have actually been fighting inflation and doing what they want it to do. A good sign for that will be the unemployment numbers going up, unfortunately.
Okay.
So I believe those numbers come out on March 10th.
Right.
So March, and it's it's going to be a couple of days of big numbers that we'll have. So March 10th, I believe, the unemployment numbers come out. I think a couple days later, the CPI numbers come out. And then I know that the Fed is actually meeting on the 15th, I think, too. So kind of mid-March, we should get some news, and hopefully there'll be signs that inflation is being curbed.
Yeah. Some other things that were just discussed here at my brokerage. We were talking about those people that are waiting for 2-3% interest rates again. That's not going to happen, right?
I mean, I don't have a crystal ball or anything, but I don't see that happening anytime soon.
Yeah. So from my understanding, the Fed was buying securities on the back end to artificially create those interest rates. And now we're no longer doing that. So the likelihood of that happening is pretty small.
Yes, I would say that as well. However, I mean, the higher interest rates is, as you know, it's not always a bad thing. It's actually a good opportunity for some buyers to actually get into home ownership with.
Right.
I mean, during the pandemic, I'm sure you remember, I mean, you couldn't get an appraisal, you couldn't get an inspection.
Yeah.
I mean, you were basically waiving everything as a buyer. And so as interest rates go up, there will be less buyers, more opportunities for you.
100%. Yeah. I November, December, January, if you got in at that time, good for you, because, though the interest rates were high, you were not having to waive any contingencies and you were getting a nice discount off the purchase price. I will say things are picking up a little bit, but we're not at the point of just waiving everything and blindly putting in a ridiculous purchase price. Last year was very intense for a lot of my buyers. It's great for my listings, but they loved it. But yeah, I mean, putting, 9-10 offers in on a place, and no matter how your offer was structured, if you weren't coming to the table with all cash and someone else was willing to pay 30% more for it, that's just what it is. Yeah. So there wasn't, us as realtors, we can do a little bit to get creative. And I like to pride myself. I think there was one time I got someone in because my name matched the wife's name of the selling agent. Yeah. And that there was a dog that looked like their dog. And we had a close, 1-for-1 offer. And they're like, we're going to go with the person with the dog and the same name because there's just too many coincidences and this is meant to be. So that doesn't usually happen. So it does not usually happen.
I'll take it though.
I'll take it though and put it on my little resume. So that's some good information. I appreciate that. Katie, I have an easy one for you. What is your favorite part about being a lender?
Oh my gosh. Yeah. Okay. Well, I kind of touched on it a little bit before, but I love working with first-time home buyers. Yeah. I love working with first-time home buyers. I love seeing the change that it makes in their lives. And that's why I keep doing it. There's just no better feeling following up with somebody that bought their first home, and you see how much equity they have in their house. And then, who knows, they might be onto their second house. It's just incredible to see what it does to people's lives and the generational wealth that it builds.
Oh, 100%. And then seeing as they grow too, I imagine maybe they start to have children and outgrow that first home of theirs. Just watching that whole progression of life that's happening and getting to be involved in that. I love being involved with my clients' lives. It's the part of my job that I actually like.
Yeah. You mean you don't like the paperwork and the computer work?
No. I mean, hey, I love negotiations, but that's about it. All right, Katie, we're going to finish this off with a house highlight. Take a look at this property here. How much would this cost us? What would our mortgage be?
Actual mortgage payment would be $4,257, and that's assuming 20% down.
Okay.
Aside from the mortgage payment, you're going to have your hazard insurance, which I estimate about $100 a month, and then property taxes around $666 per month.
All right, Katie. So it sounds like the total monthly cost is going to be around $5,000. In this particular situation, depending on where you live, I'm seeing rents as far as $4,000 for something like this. So yeah, you're going to be paying a little bit more, but at least you're going to be paying towards something that you own.
Absolutely.
Yep.
And I think even despite the economic futures of 2023, I think houses are still expected to appreciate at about 3% in 2023.
Wow, that's great.
So.
Okay. Well, thank you so much, Katie, for coming in. I really appreciate it. We're going to have her back. She's going to talk about something that's coming up in the lending world that most everyone should know about, especially if they're planning on pulling funds, equity from their house in the future.
Yes, no, absolutely. Next time, and thank you again for having me. So much fun. But yeah, next time I'd love to talk to you guys about. They're called LLPAs, if you want to abbreviate, but that stands for loan level pricing adjustments. So there's going to be some changes regarding those that you'll want to be aware of, and also we can touch on temporary buy downs versus permanent buy downs.
That sounds great.
Yeah.
Well, we'll see you next time in.
See ya. See you guys.
Bye.